Hey, good morning. Morning, Kimberly. Morning, David, Beth, Pat, George, Francois, Al, Kevin, Jan, Michael, Sledge. Good morning, everybody. How's it going? How's it going? If you saw the thumbnail, maybe you got a clue on what today is. Special day for me. Turn another year older, I guess. Anyway. Yeah. So, how's everybody doing today? Have a good weekend? Regular old weekend. It was like a rainy freaking weekend here in the Knoxville. Morning, Valerie. And yeah, here we are talking about the weather. Hey, Harry. Morning. So, I've got a kind of a warning, not really a warning, kind of a warning. Beware of the aggressive seller that might be in the market if we go just a little lower. So non-dealers have loaded up on SPX futures in size. This is non-dealers. This means algos. And aggressive sellers right around the corner. So look right here. 5-day projection bear case. Look at this. We don't get many of these. That's a big down. That's for S&P. That's for NASDAQ. Big down. If we get the bear case, that means CTAs can take this sucker down. CTAs being computerized trading algorithms, not certified trading advisors. So, I didn't have any storm damage last night, Sledge. There was some in town, I guess, but hey, is what it is. Got my white monster this morning. So, yeah, thank you all. It is my birthday. Thank you. And we had some power flicker, but that's about it. So, all right. Moving on with the algos. So be careful. Algos they are pretty long. They've been going long. This is the flat position. Just closing out and going flat is a big down. So some of the levels to watch, around 14,470 on NASDAQ. 42.46 on S&P. That's the stop levels according to Bank of America, which Bank of America tends to be more right than some of the other banks that keep track of this stuff. So I'm always watching for the Bank of America reports. Their models right here tend to be pretty darn accurate. So, all right. You may be like, how do I get these charts? Like if you go to Zero Hedge, you may not be able to see these charts. These are part of the premium subscription. So that's why you come see me and not, just pay for it yourself because it's like $100 a month or something. I don't know. I guess they have different premium options. Anyway, you just come back here. I'll sort through the stuff and find you the important stuff. So this is one thing I'm watching. If these algos start closing out in size, we could see this pull back. So last time SOX was here, the index traded some 3% lower. So SOX not really as high as NASDAQ. So as far as what we got going on. Last time though, down here when they decoupled, similar to right here, SOX eventually caught up. But right now they're decoupling again. So caution. I just can't everybody's like, oh, it's all good, the mainstream media. Well, let's go look at the chart real quick. I mean, let's actually look at this. S&P 500. Ever since we topped out back here, we've had pretty much, we got a little green reprieve, but this is down. And, look at the futures right here. This is down, coming down. I'm going to turn off this new indicator thing I'm working on. We hit the high. We hit the top, potentially, for a little while. And when we look at the simplified chart here, look, let's take these off. We hit that 44.24 level on the simplified version. That was the daily close. We stopped right there. Pullback, highly likely. That's the 1272. Coming back to the 100%, right back down here, would be right back to the breakout point. That would be the most likely scenario before we went higher up here. That's the standard pattern, is that little, if I zoom this up, This is the standard pattern I talk about all the time on this channel. All the time. We pull back, find support at the 100%, then go out to the 1618. Extend out to the 1272, right back down, and then right back up. That 100% comes in at 42.87 right there. Now, that algo level I was just talking about, let me scroll on it. Scroll back to it here. And I got too many numbers bouncing around my head. I'm sorry. So sorry. Yeah, all over the place. 42.46 for the S&P is what Bank of America estimates is the stop out level. That's where algos will go flat. And that could take us down to the 41.50 area where we have a missed monthly pivot down here. It's not turned on in this chart, but there's a missed monthly pivot. Missed monthly pivot. So thank you all. Thank you all. You know what? If you want to get me something for my birthday, tell like 5 people to watch the channel that you might know that might be interested in trading or might benefit from this. That'd be super awesome. If you wanted to give me a birthday present, that's what it would be. Like, tell 5 of your friends, family members, whatever. So if they're interested, I want to help more people. So that would be awesome. All right. So any questions on the S&P? Found resistance there, pulling back. First level support right here around 42.85, and then if we get below that, that 42.46 level is going to be stop out zone for our CTAs, and then we could come back and retest this zone right down here. So at 41.20 to 41.60, even as low as, hate to say it, but we could go as low as 40.36 down to the 618 if we really got aggressive on the downside. So, all right, that's what we got cooking on the simplified chart. This chart has been pretty much a bang on predictor ever since ever since back here in August when I first drew this. It's been nailing it pretty darn good. So, I mean, that 44.24 couldn't have asked for a closer touch right there. And that's kind of the path right now. Pull back to the 100 would be the most likely, back to the high where we broke out from, and then the next move would be up to the 1618. But if we don't hold support there, downside. So that's why I've been beating the drum for a pullback. Looks like volatility is not responding so far. Now, one of the things we have talked about here a little bit, this one has not really gone more than 80 days without a pullback, and today will be day number 70 since we bottomed out back here. We go back in the time here. This was one of the longest ones right there. If we measured that one really quickly, you can see 78 days. So, yeah, time is ticking that we could potentially see a 15 to 20% pullback in SVXY. All right, just can we set a new record? Sure, we can set a new record. I mean, it could go 85, it could go 90, it could go 100 days without a pullback. But we haven't really, ever since the COVID low, it's just one of those things. Ever since the COVID low, we haven't really gone longer than 80 days in a row. The average being 60, and we're past 60. So, SVXY is a short VIX. So, when VIX goes down, SVXY goes up. It's kind of a mind bender a little bit. All right. And why this one is because this one isn't a decaying asset like UVXY and VXX and all those other ones. So this is a leveraged VIX product that kind of sits here, always kind of works, doesn't do the decay. It actually goes up in the long term, keeps climbing. They have to regular split it occasionally instead of reverse splitting it. So this is one that I kind of keep an eye on myself right now, and it responds in, I explain this all the time, but So it's about opportunity cost. All right, this is a leverage short VIX. You should never use never use leverage products because they're freaking dangerous if you don't understand them. All right, like UVXY, VXX, all those ones that tend to be popular. Even SQQQ, TQQQ, SPXL, SPXS, all those things are leveraged and they have costs and you know there's risk, extra risk on top. Leverage cuts both ways. Leverage cuts against you and for you. So this one kind of hanging out here at 70 days, and I kind of follow patterns. If you haven't caught a clue yet, when I see a pattern like this where we get a 15 to 20% pullback on a regular interval, and we're sitting right at pushing the limits of that interval, I kind of expect the same thing we've had. How many times? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 times, 15 times in the last 3 years. So, that's not a question I'm going to get into more right now. So, not going to look at that right now. That's beyond my ability to read that and comprehend it at the moment. Now, I'll probably do a crypto special on 4th of July. So, just so you know. Days the market's closed, but the crypto's moving. All right. So, that's SVXY. There is a risk that we see a 15 to 20% pullback sometime in the next couple of days. What does that look like? Well, let's pull this over here and talk about it really quickly from the current level. From the current level, a 15 to 20, well, let's go off the high. So 15% pullback off of the high would be roughly down to 71, and a 20% roughly down to 69, 69-ish. So, there you go. Color it red, that way we know. Maybe I should go back through here and color all the dips red. So, potential for that to pull back. All right, that means VIX would go up, SVXY would go down because they're inverse, and get a little lightning in the market. Now, we have an unusual situation that's been happening the last few days in the market, like few trader days, not few weekend days, where S&P 500 has been dropping, but VIX has continued to drop right alongside it. This is an unusual situation, and several people have asked me why. Part of it's the shift away from trading S&P 500 options in a longer-term monthly time frame, and 50% of that volume that used to happen in the month-to-month time frame has shifted to a daily time frame where they're just trading zero-day options. So, taking 50% of that volume off of trading those front-month options, that's how they price the VIX, is with those front-month options being traded on the S&P 500. And when you take out 50% of the volume, it does weird things to something that's historically worked. So I don't jump into the math and try to figure out how exactly that's affecting it, but that's been one of the things I've kind of been looking at, is how the volume in daily options spiking corresponds with this thing kind of plummeting out. So anyway, yeah, I mean, you can watch all sorts of stuff, but bigger picture, just kind of short the market is what I'm not really big short. I'm just kind of it's an opportunity finder's market right now. That's what I would say. So, like, AI is probably played out. Big tech probably getting played out. A lot of stuff. At least 7 of the big tech names, the ones that really rallied hard, those are the ones likely to pull back outsized. We may see rotation from those big tech into the rest of the market too. That's evidence when we look at the S5FI. You can see that thing's dropping off quickly, right back down in the 50 zone. But NDFI, the NASDAQ, we're seeing rotation out of the NASDAQ 100. A little bit, not a lot of it. Came right up to 80. Now we're getting a pullback. So, ES, if you're unfamiliar, S&P 500, SPY. Why do I use this ES1? Because it trades all night. It opened at 6 o'clock yesterday afternoon, evening, Eastern time, and gives me overnight data. Whereas the SPX right here, no data until the market just opened right now. So there's a gap. It makes gaps, but the ES right here doesn't make gaps. Where do I think we're going? Same place I mentioned last week. Probably going down to the zone here. NQ, same kind of situation, potentially breaking down, although we're holding a higher low at this point. That could be, I don't know. That's a weird pattern that doesn't tell me much right now. So this looks more clear that we're going down here, and it's probably going to take, looking at the trend here, if we keep going down the trend, we could be down here into July. And if we break that support, we could go down even quicker. So even more quickly. All right, NQ, less clear. That one could pop again, but we have that 14,700 area where the algos are. Russell, right in the target zone. Oop, need to click on the daily, not the monthly. Now it's got it all goofed up. Awesome, 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 awesome. So Russell, I drew a big fat target right there. We're right down there to it. Do we hold here? Do we push the other support box right here? If we hold here and go 2,000, maybe 2,100. If we push on down, that would be the support, and then we go. If we break that support, down, extensions down. The same path I've been outlining for days and days. CL, just sideways consolidation. Has it made a low? Has a higher low than back here and back here? Oh my gosh, this just looks corrective and looks like it needs one more flush. So watch for one more spike down to finally flush this out. This is just overlapping, nasty, doesn't tell me anything, just indicates sideways. So that's what that indicates right now, is just more of that. GC finally hit the daily roadmap line. This can be, that can be it. Like, this can be off to the races. That was, we hit it 2 days today, showing a little bit of green, just a little bit of green. I would not be surprised if this thing just all of a sudden takes off, runs on a tear. Target zone up here around $2,200 an ounce. If you're unfamiliar with gold, that's you could trade the metal itself, you could trade the futures, you could trade something like GLD, which has a little different pricing, but 200-ish would probably be the price on GLD. It doesn't exactly run. You can't just exactly knock one zero off the end to get the prices. Just like SPY is not perfectly 10% of S&P 500. At least not the futures or the index. All right. Bitcoin, GC1 exclamation point is GC. That's futures, gold futures. Beth, I know you know what that is. Bitcoin, right up near the target zone. Get in the zone, target zone. We may have a little trouble breaking on up here, but do kind of expect that 32 sometime soon. I got a giant blue box on there. I'm not sure what that was. Let's get rid of it. So with that, and if the move that we had before plays out, this could be up to 36-ish by the end of June. That's just measuring right off of here, this first move up. And if the whole move up plays out, could be up to this 39,000 by sometime late July. This whole big move right there. That's what that line copies right there. All right. So that's what we got cooking on. It works better if I put it in log scale, because that's what those are. And right there, low to high, low to high, potentially right up there at that $39,000, $40,000 area. Be pretty sweet, right? I'd love to see that. All right, Ethereum on a little different path, finding some serious resistance right there where we found resistance before. May lead to another pullback. Be careful. I'm not sold on Ethereum doing the same thing. It's on a little different pattern account. Dollar still churning in the zone. We may get a little pop up to the roadmap line one more time before it rolls on over. Stuff moving today. Meds, nice pop. Probably going to come back. Looks like that one was on the list before, last week, I think. One of the days. Breaking above that zone, but probably going to come back and retest it. MLTX. I'm squinting a little bit this morning. The lights are bright. MLTX, pharmaceutical, biotechy stuff. You know, you got to be careful on that stuff. You know, doesn't always follow my patterns. So there's nothing I can project off of that. It's a ridiculous pattern. LCID, that one right there, pretty much looks like a dumpster fire of a stock, and heading for a reverse split at some point is highly likely. I mean, look, they lose a ton of money, don't sell a lot of vehicles, and yikes. PFE, can't get the reversal going. Hadn't been able to break above the roadmap line. It's not no bueno. 33 is the next target down. And we did that thing where we came up, retest, 1618, failed to even get back to the 100% to retest, extension down right there. Same pattern, just upside down. That would be the next place I expect it to go, right down there around 33. HKD looks like nothing. I don't know why that was on StockTwits. That looks like a horrible, nasty chart. Nothing to do. OCEA, get all the letters out. I would expect that to retrace. That's another biotech, another one of those pharmaceutical biotech. Be careful. CCL, that one looks likely to retrace. These guys have earnings coming up today. Yeah, didn't pick it up, but they've been losing a lot of money, even though they move a lot of money. Losing a lot of money on you can't make up for in volume what you lose on per share. That can hurt, and that can go back down in a hurry. So kind of concerned that Carnival may not make it. FGEN, wow, that's a big gap down. Another pharmaceutical. You never can tell. That's why I say my patterns don't always work out on these. They just announce, oh, you know what? That drug we've been working on for the last 20 years, guess what? The FDA kicked it out and said we can never touch it again. And all of a sudden, you get something like that. So incredibly hard to trade biotechs. IBM, just a sideways churn. Up a little bit, but that's a gnarly sideways pattern. VTNR keeps going lower. How low can she go? She can go to 0. Got nothing right now. That's a nothing pattern. Just a sideways, choppy, nothing pattern. Lily, God, that thing keeps on making extensions here. Highly likely to retrace at some point here. At least look at the size retraces. You don't think this thing can get another one? Guess what? At some point in Lily's future, we're going to do another one of these nice, big, fat retraces. And chasing it right now is a dangerous proposition. Chasing it either way. Like chasing the pullback, this thing can keep on trucking until you run out of money, holding your options or whatever. And we're or holding shares short. But if you jump in long now, are you going to wait for that pullback that could take 6 months or 3 months or whatever to work itself back out? So I would wait until there is a pullback to a support level, turns the bottom, and then get into it. So BMEA, another biotech making the list. PANW, right up to extensions, is another one. You might be like, there's no way this can pull back like a giant amount. Guess what? PANW has pulled back 20% in just a short month of 30 days. Look where it puts it. Right down near the roadmap line. If I flip it the other way, we can... Right there, 30%. Puts it right down to the roadmap line zone. Right back to where it consolidated before. You tell me they can't do it, I'll tell you, you need to be careful. mRNA keeps dropping out. Moderna, doesn't look so good. Bouncing off the roadmap line, extending. Yeah, look at that. Extended down, hit the 1272, right back up in there, right out to the 1618. Come back up to the roadmap line would be the next classic pattern. And then we find out what she's going to do. It can go lower, though. It can extend down to 99 just as easy as it can pop up to the roadmap line. Wolf, the extent, it does take energy to go down. And so it probably needed a little retrace. But Wolf still below the roadmap line, still a kind of a dumpster fire situation here, and can go lower. I mean, that's a downtrend. Don't think that there's nothing indicating that reversal is set up to go yet. Boyle did a reverse split, a massive reverse split, 20 for 1, and made it look like this thing's going higher, but I don't know. Natural gas just looks like it's parked at the bottom. It can just hang out here. It doesn't have to go up, or it can just stay at the bottom down here. Maybe like, how do you know? Well, look, I mean, it spent almost all of 2020 down here. Sometimes it moves. Sometimes it doesn't. It can spend a good long time just consolidating. It can spend the rest of 2023 just in this little range down here between like a $2 and $3. Doesn't have to move. MRCY going down in a blaze of glory. No bueno. Tesla, highly likely to get that deeper retrace. Arthur, I know you love to go long this thing. Be careful, my man. We can get that retrace right down to the roadmap line. It needs it. I mean, that was a power move up. And all the way back in February, I drew these arrows on here that would come up, retest that, retrace. It would not surprise me to come back down to retest these highs from where we broke out from back here. Right in that zone, around 220. Would not surprise me one single bit. May take out to July or August to get there. So TMV, just churning. TLT, churning. TBT, churning. KOLD, ultra short natural gas. As gas climbs a little bit, ultra short dropping. Remember, this is a decaying asset. That's 2 back-to-back splits right there. 5 for 1, 4 for 1. Haven't done it in a while. If natural gas starts climbing, they'll have to reverse split this again. This one is a decaying asset. And finally, Google getting a little pullback, just consolidating, having trouble breaking on through. Came up, poked above, and just parked. Hasn't been able to go. That is the August high. If we compare it to QQQ, you can see that it's lagging. So that's opportunity for Google. You know, this is the big one that's been lagging. Amazon here. Put it back to the August high. Way underperforming the rest of big tech. Kind of gap down and, you know, way underperforming. That's almost a 20% catch up you need to do to catch up to the NASDAQ there. All right. I see MRK. Not really moving today. Kind of flat. Kind of stuck at the resistance. So it has the market roadmap bounce, but rejecting the 618. Looks like might go right back down. All right. And then Beth, you said GLDG. That looks pretty horrible. Barrick is my favorite play, but that one still looks like it's not going anywhere. Measured bounce setup. Potentially. Let's remove some of these lines. So if this was a measured bounce setup, right there's the target around 25. I'm not sold on it. SLV has a better measured bounce setup cooking. Even though right below the roadmap line, that's still holding a measured bounce. That's the one I got my money on long term out to 2025 right now. All right. That's kind of what we got cooking today. So bias for the day, still correcting. Could get a little churn, but we haven't really, we're kind of below the immediate support here. Can't even click on the right one. And this little support line, kind of below that, down to, would not surprise me to continue right on down the path here. Just kind of losing a little value, losing a little value. We might get some lightning that would spike VIX, dropping SVXY. We left a gap back there where the futures rolled over. We may go play in that zone. So, yeah, miners not like they're on a little different path here, like NEM, gold miners. I can talk about all that stuff tomorrow during 30 minutes of awesome. If you bring your questions about gold mining companies, I will answer them tomorrow. 5 p.m. I do 30 minutes awesome. So, all right, everybody, I'm going to head over to Discord, and want you to have a good day. Be careful. The account you say may be your own. Kind of cautiously biased here. You know, my caution. We could just go sideways a little bit, but we could get some lightning, some big drops. So you need to be careful. This is not a go all in situation. This is a be very cautious. Once we get the pullback, if and when we get this pullback, you know, eventually we're going to get a pullback. It's do we grind higher first or do we pull back? If we can get a pullback that kind of freaks people out a little bit, it's time to go. I mean, like, we can go higher and count on it. Right now, though, is the time to be careful. It may, I mean, it could grind higher and then, you fall in the trap door. So this is one of those times where I'm just not sure what's happening next. And why am I not sure? Because we made this massive move up from March 13th right up here. Even though we consolidated and then went exponential, well, that's like the perfect time for it to do a exponential type pullback. So we haven't revisited support since back here in March. Kind of do. please be careful. Yeah, it can be a bull trap, or it could just be a trap for the whole market. Yeah, that's why I was showing the CTA levels. So be careful, everybody. I'll be back with you again tomorrow morning for another Morning Monster. And like I said, tomorrow we have 30 minutes of awesome coming up at 5 p.m. So make sure you're subscribed. And if you want to leave me a comment, that's cool too. You're watching this later when I'm not live. Have a great day, everybody.